buying 1 June Mexican peso 65.05 on a limit. Good till
This is Alan Bush with the daily financial forecast for Tuesday, April 21st. In the stock index futures, we did start out higher, and it does look like earnings are actually coming in better than expected, even though first quarter earnings are likely to show a decline. However, the numbers that we are seeing so far this quarter are somewhat encouraging and have come in stronger. So that has supported stock index futures over the last couple of days. We continue to feel that the main trend is higher, and we also are expecting some new contract highs in the S&P and also in the Dow. In fact, these would also be new historical highs. So nothing changing in our long-term view in the indices. Over in the currencies, though, we are seeing some pressure developing in the euro currency as the issue of a possible Greek default on its debt becomes more intense. Also, we have Eurozone financial ministers meeting this week discussing apparently the Greek situation. So as the worries intensify to some degree as far as the financial position for Greece is concerned, that is undermining the euro currency. One thing to keep in mind, political markets are usually markets to be avoided, and I think that is very much the case now in the euro currency. So I would stand aside there, even though it does look like the euro zone economy is improving. However, we do feel that the Canadian dollar is still the best long. The reasons for this are, for one, the energy markets appear to be bottoming, at least crude oil now substantially off of its lows that were made a couple of months ago. We also feel that the Fed will be very slow here to raise interest rates, which is supportive to the Canadian dollar from an interest rate differential point of view. So the Canadian, once again, appears to be the best long of all of the foreign currencies. Now, moving over into the interest rate markets, futures were a little bit higher earlier, some pressure more recently. We are building what appears to be a congestion pattern in the 10 and 30-year issues. Ultimately, though, we are likely to break out to the upside as traders become more and more aware or more and more in tune with ideas, in my opinion, that the Fed will be slow to raise interest rates. We feel that they may not be able to raise rates until next year. So with that in mind, still feel that the main trend is higher for the long end of the curve. That would be the 10 and 30-year issues, especially the 30-year. And this is a trend that will probably last for quite some time. So everyone, have a good trading day. And once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.